So Google's dropping huge, even though it had great earnings. So what exactly is going on here? The story is more interesting than you think here. So as I started digging into it, here's what I found. Essentially, Google had a great earnings. The company is growing, which is amazing, over 20% a year, even though they're worth almost $4 trillion. So a company that big still growing that much year over year is amazing, by the way. Now, it's dropping largely because of how much they're spending. They're spending a ton on AI infrastructure, all that stuff. And eventually that will come back and pay dividends for the company. But right now, the market is kind of weary of all that additional spending that's happening right now. And that was a very similar story to Tesla yesterday that I had shared in my video. Great earnings, great revenue beat, but EPS was lower because of how much they're spending, all that CapEx, okay? The same story here with Google. But when you start digging, it gets even more interesting. Check this out. When you look at their fundamentals and their earnings and their EPS, how is this even possible? How is the market and analysts this far off? Thinking they're going to come in at 260 and they came in at $9. How can they be that far off? Well, here's what happened. Google actually owns 6% of SpaceX. SpaceX just went public. So that's a bit of a one-time little amount for Google. Interestingly, when you start digging even deeper, they also own 14% of Anthropic, which is set to go public here very soon. Google, even though its core businesses are growing, may also turn into a massive growth engine simply because of their VC arm investing in these other companies, kind of like a holding company that invests in these other companies that are also becoming huge companies, right? So Google owns 6% of SpaceX, which is now worth a huge chunk of Google's overall market cap. So very interesting play here. Now, where's the stock headed? Well, as you can see, we broke this very important level here. And in my view, if we stay below 330, it's looking kind of bearish, at least in the near term. I pulled back here into this long-term chart, and I'm looking at this long-term trend that we stayed within for a long time. And if this thing keeps dropping and the Qs continue to see distribution, we could see Google as low as 270, maybe even $250. Now, I want to draw your attention to this inflection point that happened in the fall of last year, 2025. Notice it broke out of this long-term trend. Now, we've built this really cool tool here in Wall Street AO that I'm very proud of called the price to value gap. Now, look how far above we are right now with Google. Notice the point at which we crossed it, again, was last fall. We crossed it. Now, normally you like to see a company trading pretty close to this. If it's trading too far below, then you can consider it kind of a good deal. If it's trading too far above, then you're kind of paying an extra premium for it, and Google might have a little bit more to drop before it kind of pulls back into value. So very interesting play here. It would come right back into that and fill the price to value gap closer to the 250 to 270 range. But again, near term, I'm watching very closely here at $330. If it can get above and stay above that level, we're back to business. But below that, watch for more selling, especially here with the Qs. The Qs are continuing to show distribution. So I hope you enjoyed this quick video. Watch that level on Google, and I'll see you in the next one.